Ratna died on 30th 6 2018. Her executor should be entitled to. Her share of goodwill. Goodwill was firm's goodwill. So we have taken out the share of deceased partner, that is Ratna's share. Most of the time you will get a 12 marks question from your admission chapter. Okay, but in one of the year they have asked 12 mark question from retirement. Stock to be increased by 20%. So what is stock? Stock is an asset. So increased means increase in asset. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today I am in the second session of your revision class and the chapter name is a reconstitution of a partnership firm, under that retirement and death of a partner. So already I have discussed few of the concepts in your session 1, that is what are the questions, it is 1 mark, 2 mark as well as 6 marks question what they have asked in your previous question paper. So in today's session also we shall see the blueprint once again. So your chapter number is 3 and the chapter name is reconstitution of a partnership firm, under that retirement and death of a partner, where you will get 1 mark 2 questions, 2 mark 1 questions as well as 6 marks 2 questions. So once again I'll repeat, you will be having an alternative between 6 marks and 12 marks. So go through that both the chapters of admission as well as retirement, where you can expect 6 marks from retirement and 12 marks from admission, or 6 marks from admission and 12 marks from retirement. So for the safer side, go through the questions of both 6 marks and 12 marks of both the chapters. So overall weightage of this chapter will be 16 marks. But as per the blueprint, so they have asked 2 questions from this chapter itself for 6 marks. Okay, so hope you are clear about the blueprint of this chapter. Now moving on to the session, let us see one more 6 marks question of this chapter. So that is on death of a partner. So Shobha, Sudha and Ratna are partners sharing profit and loss in the ratio 2:2:1. Their balance sheet as on 31st 3 2018 was as follows. So in a previous session we have solved similar problem, but where the balance sheet was not given, they have just given the adjustment and we had prepared our executor's account as well as deceased partner's capital account. Hope you clear there are difference between, there are 2 entries where we have difference between your executor's account as well as deceased partner's capital account. So you can go through your previous session and see what is the difference. Now they have given us a balance sheet where we have liabilities, amount, assets and amount, and they have given us few adjustments here, where Ratna died on 30th 6 2018, her executor should be entitled to. So let us see what we have to prepare and what is the amount that has to be given to the executor. So her capital on the date of last balance sheet, her share of reserve fund on the date of last balance sheet, then her share of profit up to the date of death on the basis of previous year profit they have given, that is 20,000. Her share of goodwill, so goodwill of the firm, here they have given valued goodwill of the firm, and interest on capital at 10% per annum. You are required to ascertain the amount payable to the executor of Ratna by preparing what? Ratna's capital account. So what you have to prepare here? You have to prepare Ratna's capital account and see what is the amount that has to be given to her executor. So we shall directly go through the solution. Write the heading Ratna's capital account. Now what do you transfer first? We will transfer the capital. Okay, so how do you write? By balance brought down. What is Ratna's capital? That is 30,000. So by balance brought down, that is 30,000. After capital, so what you have to transfer? Her capital on the date of last balance sheet, her share of reserve fund on the date of last balance sheet. So what is the reserve fund we have? 15,000. So we have to transfer her share of reserve fund. So how do you write? By reserve fund, and the reserve fund is how much? 15,000 into her share. So 15,000 into her share is how much? Profit sharing ratio. So here who died? Ratna. So Ratna share is 1/5. 5. So 2 plus 2 plus 1, that is 1 by 5. So 1 by 5. So 15,000 into 1 divided by 5. So I'll get 3,000. After reserve fund, what you have to transfer? Her share of profit up to the date of death based on previous year profit, which means that we have to transfer to profit and loss suspense account. So by P&L suspense account. By P&L suspense account, and the previous year profit is 20,000. So 20,000 into her share is 1 by 5 into how many months she was there in the business. So when did she died? So she died on 30th 6 2018. So 31st 3 2018, which means that our beginning was 1/4/2018 to when did she die? 30th 6 2018. So 30th 6 2018. So from 1/4/2018 to 30th 6 2018. So how many months? 4, 5, 6. Only 3 months she was there in the business. So 3 divided by 12. So 20,000 into 1 divided by 5 into 3 divided by 12. So 1,000 will be her profit. After that, so her share of goodwill of the firm they have given. So goodwill of the firm. So valued firm's goodwill. Firm's goodwill is equal to, firm's goodwill is how much? Rupees 40,000. So 40,000 is firm's goodwill. Now we have to take out her share. So Ratna's share. Ratna's share is equal to 40,000 into 1 by 5. So 40,000 into 1 by 5 is 8,000. Now this 8,000 has to be distributed among the partners, that is remaining partners. Who are the partners? Shobha and Sudha. Shobha and Sudha. So 8,000 into which ratio? So ratio is, when she died, ratio is 2:2. 2:2. So ratio 2:2. So 8,000 into 2 divided by 4. So we'll get 4,000 each. So 4,000 and 4,000. So this will be her share of goodwill, that is Shobha and Sudha. So how do you write? By Shobha's capital account, that is 4,000, and by Sudha's capital account, that is 4,000. So hope you are clear. Next, what they have given? Interest on capital at 10% per annum. So how do we write? By interest on capital. So what is the capital? That is 30,000 into 10 divided by 100 into, so for how many months she was there in the business? Only 3 months. So 3 divided by 12. So 30,000 into 10% into 3 divided by 12. So we'll get 750. So let us see once again. First we have transfer the capital of last balance sheet. Her share of reserve fund we have taken, that is 1 divided by 5. Next what we have? Her share of profit, that is profit and loss suspense account, 20,000 into 1 divided by 5 into 3 divided by 12. Next, her share of goodwill. Goodwill was firm's goodwill. So we have taken out the share of deceased partner, that is Ratna's share. So it was 8,000. When you distribute, you will get 4,000 each. So by Shobha's capital account, by Sudha's capital account, 4,000 each. Next, interest on capital they have given 10%. So 30,000 into 10%, but she was not there for the full year. So 3 divided by 12, it will be 750. Now we have to balance. So balancing figure, since we are preparing Ratna's capital account, balancing figure has to be transferred to where? Ratna's executor's account. To Ratna's executor's account. So how much? What is the amount? 30,000 plus 3,000 plus 1,000 plus 8,000 plus 750. So it will be 42,750. 42,750. So this amount is what? This is the balancing figure which has been transferred to Ratna's executor's account. So this is how you are going to prepare when they have given the balance sheet. No need to worry. So you have to transfer the capital next to your reserve fund. Then whatever the information they have given, you have to transfer. And the balancing figure will be transferred to executor's account. So hope you are clear about it. Now we shall directly move on to the 12-mark question. So this is a question paper problem once again. So I have told you most of the time you will get a 12 marks question from your admission chapter. Okay, but in one of the year they have asked 12-mark question from retirement. So let us see the question here. Abhay, Bhuvan and Chetan were partners sharing profits and losses in the ratio 2:2:1 respectively. Their balance sheet as on 31st/3/2021 was as under. So they have given us balance sheet same as your admission, but only few changes you have to make here. And they have given certain assets also. Now let us see the adjustments. Chetan retired on 1/4/2021 from the business. The following adjustments are to be made. Next, stock to be increased by 20%, depreciate machinery and furniture by 5% each, maintain PDD at 5% on debtors, building are revalued at rupees 90,000 and they have given goodwill of the firm valued at rupees 20,000 and we have to treat as per accounting standard 26. Prepare evaluation account, partners capital account and balance sheet as on 1/4/2021. So we shall directly go on to the solution. We shall start solving this solution whereby I'll explain in detail. Okay, so first we shall prepare revaluation account. Revaluation account, as usual, what do you record in the debit side? A minus L plus. If any assets value have decreased and liability value have increased, you will record in the debit side, and in the credit side it is A plus L minus. If any assets value have increased and liability value have decreased, you will record in the credit side. Now in order to prepare your revaluation account, what you have to see? You have to see your adjustments. Now let us see the first adjustment. Stock to be increased by 20%. So what is stock? Stock is an asset. So increased means increase in asset. So where do we record increase in asset? In the credit side. So by stock account. By stock account, and the amount is or the percentage is 20%. So you have to calculate what is the stock value. 30,000 into, so 30,000 is the stock value, 30,000 into 20%. 30,000 into 20 divided by 100. So 30,000 into 10% in the sense it is 3,000, 20% in 6,000. So 30,000 into 20%. So this will be 6,000. After that, next one is depreciate machinery and furniture by 5% each. So depreciation of machinery and furniture, both are asset. So decrease in asset. So where do we record decrease in asset? That is in the debit side. So 2, which are the assets? Machinery and furniture. So to machinery account, and here to furniture account. To furniture account. So machinery value is how much? 20,000 into what is the percentage? 5%. So 20,000 into 5 divided by 100. So 20,000 into 10% in the sense it is 2,000, 5% in the sense 1,000. Let's recheck. 20,000 into 5%. Yes, it is 1,000. Next, furniture value. So furniture value is 15,000. 15,000 into 5%. So 15,000 into 5%. So it will be 750. So we are done with this. Maintain PDD at 10% on debtors. Now let us see whether we have PDD in your balance sheet. Yes, we have 2,000 PDD. Now we have to compare. So how much they told us to maintain? That is 5% PDD has to be maintained 10% on debtors. So 42,000 into 10 divided by 100. So it will be how much? 4,200. Correct? 42,000 into 10%, it will be 4,200. Earlier it was how much? 2,000. Now it is 4,200. So which means that now the PDD have increased. So increased to the extent of 4,200 minus 2,000. So it will be 2,200. So PDD is what? It is always a liability. So increase in liability. How much? 2,200. So where do we record increase in liability? In the debit side. To PDD. So how do you record? That is 4,200 minus 2,000. 4,200 minus 2,000. So that is 2,200. Increase in liability L plus. You will record in the debit side. Next, building are revalued at rupees 90,000. Now let us see what was the value of building. Building was 80,000. Now they are telling that earlier it was 80,000. Now it is 90,000. Revalued amount is 90,000, which means that asset have increased. So increase in asset by how much? 10,000. So increase in asset. So where do you record? In the debits credit side? So by building account 90,000. So what was the value? 90,000 minus 80,000. So 90,000 minus 80,000. So it will be 10,000 increase in building. Next, what they have given? Goodwill of the firm. So we will take under partners capital account. So we are done with our revaluation account. Now balance both the side. Balancing figure transfer to a partners capital account. So now we shall balance. In the credit side it is 16,000. So credit side 16,000. 16,000 minus 1,000 minus 750 minus 2,200. So we'll get how much? 12,050. So what is this? Profit. So where do you transfer? To profit. Transfer to partners capital account. To profit transfer to partners capital account. Who are the partners? Abhay, Bhuvan and Chetan. So you have to transfer to all the partners, Abhay, Bhuvan and Chetan. So what was the profit? 12,050. 12,050, and the profit sharing ratio is 2:1, which means that 2 by 5, 2 by 5, 2 by 5 and 1 by 5. So 12,050 into 2 divided by 5. So I'll get 4,820, 4,820 and 12,050 into 1 divided by 5. 2,410. So this is a profit, that is revaluation profit, which has to be transferred to a partner's capital account. This 2,410. So this is about your revaluation account. Next we shall move on to partner's capital account. Partner's capital account. Now as usual, during admission, how we have learned how to prepare partners capital account, same way you will prepare under retirement, but with certain adjustment. Now the main difference under revaluation account is that everything you will record same, but the balancing figure, what you get profit here it has to be transferred to all the partner, including the retiring partner. But in admission, we will transfer only to the old partners, not to the new partner. But here it has to be transferred to all the partner, because one who retires is also responsible in earning this profit. Okay, now we shall begin our partner's capital account. First, we will transfer the capital as by balance brought down. by balance brought down. So what is the capital of the partner? They'll give in the balance sheet 60,000, 50,000 and 40,000. 60,000, 50,000 and 40,000. After transferring the capital, the second step is that you have to transfer the revaluation account balance. But in the problem, we have a profit of how much? 4,820, 4,820 and 2,410. So, I have to transfer that profit. So, by revaluation account in the bracket profit. So, how much profit we got? That is 4,820, 4,820, 4,820 and 2,410. After this, your third step is that you will check your balance sheet whether there is any reserve, fund and profit and loss account. Now, we shall check our balance sheet. Yes, we have reserve fund here. We have profit and loss account. So, we have two, but you have to transfer to all the partners in their profit sharing ratio. So, how do you record? By reserve fund 30,000, by reserve fund 30,000 into their profit sharing ratio 2:2:1. So, 30,000 into 2 by 5. So, it will be 12,000. 12,000 and 30,000 into 1 divided by 5. So, we will get 6,000. So, overall it is 30,000. In the same way, by profit and loss account. So, what is the amount? So, profit and loss account amount is 5,000. So, 5,000 into 2:2:1. So, you'll get 5,000 into 2 divided by 5. So, you'll get 2,000, 2,000 and 1,000. So, hope you are clear about it. So, we are done with 3 steps. First, we have brought down the capital. Next, revaluation account balance. Next, we have transferred the reserve fund as well as profit and loss account. Next step is in the admission is what? New partner brings capital and goodwill. But here it is not there. The next step is what? Your goodwill treatment. So, how do you treat the goodwill? Now, goodwill of the firm they have given. So, how much is goodwill of the firm as 20,000. So, you will calculate firm's goodwill. Firm's goodwill, that is equal to how much? That is 20,000 rupees, 20,000. Now, take out the share. So, who retires? Chetan's share. So, I will write C's share is equal to 20,000 into what is his share? That is 1 by 5. So, 20,000 into 1 by 5. So, I will get 20,000 into 1 divided by 5. So, I will get 4,000. So, once again we shall recheck 20,000 into 1 divided by 5. So, we will get 4,000. Now, this 4,000 have to be distributed among the remaining partners in the gain ratio. So, it has to be distributed in the gain ratio, but here gain ratio is not there. So, distribute in the old ratio itself 2:2. So, you will get how much? 2,000 each. So, this is how you are going to treat the firm's goodwill. First, take out the share of the retiring partner. So, then distribute among the remaining partner in their gain ratio. That is 2:2. So, you will get 2,000 each. So, how do you write here in your partner's capital account? So, your entry will be remaining partners account data to retiring partner. So, who are the remaining partner? By, that is, who are the partners? Abhay and Bhuvan. So, by Abhay's capital account and by Bhuvan's capital account, and here to Chetan's capital account. Now, Where do you write the amount? We'll write the amount in Chetan's column. So how much? 2000 each. And here you have to write in Abhay as well as Bhuvan. 2000 each. So this is how you will treat the goodwill as per Accounting Standard 26. Now you are done with this. Let us see whether anything is pending to be recorded in your partner's capital account. So nothing is pending. You will balance both the side. Balancing figure will be carried down for the balance sheet. Okay, so let us see the answer. So in your credit side, we have 60,000 plus 4,820, 60,000 plus 4,820 plus 12,000 plus 2,000. So you'll get 78,820. 78,820 minus 2,000. So it will be 76,820. Now coming to Bhuvan, 50,000 plus 4,820 plus 12,000 plus 2,000. So it will be 68,820 minus 2,000. So it will be 66,820. Now coming to Chetan, whatever the amount to be paid, it has to be transferred to his loan account. Okay, so let us see what is the amount. 40,000 plus 2,410 plus 6,000 plus 1,000 plus 2,000 plus 2,000. So it is 53,410. Now the amount to be transferred to Chetan, 53,410 will be transferred to Chetan's loan account. And this amount will be carried down. So to balance carried down. So whatever the amount you have carried down here, bring down that balance. First we shall write the total 78,820, 68,820 and 53,410. So this will be balanced both the side. So the amount to be carried down after totaling here. Okay. Now we shall directly move on to the balance sheet. So I'll write the heading balance sheet as on. Balance sheet as on which date? On the date of retirement, 1/4/2021. 1/4/2021. Now we shall start with your balance sheet. Let's go to the balance sheet what they have given in the question. So any changes, any appreciation, depreciation to be made, we shall take here and adjust our balance sheet. Okay, now we shall go through the asset side. We have cash in hand, 40,000. No changes in cash in hand, but in admission, we have to add the capital as well as goodwill, which is bought by the new partner. Here, no need to take, we'll take directly cash in hand, 40,000. So the first is cash in hand, that is 40,000. Next one, we have debtors 42,000, but we have PDD to be maintained at 10%. So that will be how much? So PDD to be maintained is 4,200. So 10% to be maintained. So now the exact amount will be 4,200. So debtors 42,000 minus PDD 4,200. Debtors 42,000 minus PDD at 10%. So this will be 4,200. So 42,000 minus 4,200. So this will be 37,800. After that, we have stock 30,000. Let's see any adjustment on stock. Yes, stock has been increased by 20%. So I have to add appreciation. So stock 30,000. Stock 30,000 and it has increased. So add appreciation. So appreciation of how much? So appreciation by 20%. So 20% appreciation means 6,000. So here we have recorded. So 20%, which means that it is 6,000. So outer column 36,000. Next, what you have after stock, we have furniture 15%. Any adjustment on furniture? Yes, we have depreciation of 5%. So furniture minus depreciation of 5%. So furniture value is how much? That is 15,000 minus 750. 15,000 minus 750. So 15,000 minus 750, it will be 14,250. After that, we have machinery 20,000, and again we have depreciation. So machinery minus depreciation. Machinery minus depreciation of 5%. So machinery value is how much? 20,000 minus depreciation 1,000. 20,000 minus 1,000. So it will be 19,000. So clear about machinery. Moving on to the next one. So we have building 80,000, and again building has been revalued, which means that 10,000 it has increased, 10,000 appreciation. So building 80,000, building 80,000, add appreciation of 10,000, outer column 90,000. Next, any other assets? We don't have any other assets. Now coming to your liabilities, we have creditors 30,000, no changes. So we'll write directly creditors, that is 30,000. Next we have bills payable. Bills payable. So bills payable is how much? 10,000. Bills payable 10,000. Next we had reserve fund already, which has been distributed in your partner's capital account. So no need to take here. After bills payable, we have profit and loss account, which is already transferred. Capital, so we have taken. Now which capital we have to take? That of Abhay and Bhuvan. So we have to take the capital which has been balance carried down. So how do you take? So you will write here capital. Will take the capital of Abhay and Bhuvan. So Abhay's capital is 76,000. This amount you have to take. So 76,820 and 66,820. So the total is 76,820 plus 66,820. 76,820 plus 66,820. So it will be 1,43,000. 1,43,640. Next we have left out with Chetan's loan. So you have to take, so Chetan's loan. So Chetan's loan is how much? It is also a liability which has to be paid in the future. So 53,410. 53,410. So now we are done with this. Now let us see whether we have taken all the adjustment twice. Stock to be increased, we have taken. Okay, next depreciate machinery and furniture. Once we have taken in your evaluation account, and then in balance sheet, maintain PDD, the valuation account and balance sheet. Building we have taken. Goodwill of the firm we have taken, that is valued goodwill. Next we have to balance both the side. So let us see whether our balance sheet tallies. So if you total both the side, so let us total the assets first. So 40,000 plus 37,800 plus 36,000 plus 14,250 plus 19,000 plus 90,000. So it will be 2,37,050. 2,37,050 in the asset side. Now coming to your liabilities, 30,000 plus 10,000 plus 53,410 plus 1,43,640. So we'll get 2,37,050. 2,37,050 on both the sides. So your balance sheet get tallies here. So this is how you have to prepare your 12 marks problem, where you have to prepare your evaluation account, partners capital account and balance sheet for 12 marks. So same as your admission, only few changes you have to make. So my advice is that to be in the safer side, go through the problem of 6 as well as 12 marks from both admission as well as retirement chapter. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.